In this video, I'm going to show you how to make adjustment to income statement for further analysis. Keep this in mind that I have asked you to do the same thing for your company in part 1 of the project. To begin with, I have an Excel file that I'm working on, and this is the same file that I have used for adjusting balance sheet, and this file has as reported and standardized financial statement for Procter and Gamble, and I'm going to use standardized financial statement for the adjustment because we are going to use standardized financial statement for further analysis. So what I mean by adjustment to income statement means replace all total and subtotals with formula and add few line items in the income statement. For example, I want to add few lines like total indirect operating cost excluding depreciation amortization, EBITDA, depreciation amortization, and interest income expenses, and also common dividend paid out and addition to return earning. So all the line items that I want to add in income statement are red in color. So please do the same for your project as well. Let's start replacing total and subtotals with the formula. So begin with, I want to start with the gross profit. So select the gross profit row here and Control B, and then put the line on the top. And now, as you know, this gross profit basically means your total revenue minus your direct cost, right? That's the first adjustment. Once you replace with the formula, you can drag this little box to the right? Okay, that's the first adjustment. And now the second adjustment is slightly more technical, but you can do it. So in general, depreciation and amortization is an expense for tax purpose. So when accountant report or prepare this financial statement, they include depreciation and amortization in the selling and general administrative expenses in general. And sometimes in some of your company's financial statement you might find that separate. If it is separate, that's fine. Look at another video which has a separate depreciation and amortization, and that helps you how to adjust. But in this case, there is no separate line item for depreciation and amortization, and we want to separate this depreciation and amortization from selling, general and administrative expenses. So in order to do that, we need to get depreciation and amortization from cash flow statement. Keep this in mind. We need it to compute EBITDA and free cash flow in the future. But for finance people, depreciation and amortization is a cash flow, so that is always included in free cash flow calculation. But for accounting purpose, this is an expense, so it is not very important to put this separately. So they don't put it separately. So but we want to put it separately so that we can use it in the future when we compute free cash flow. So let's get this depreciation amortization from the cash flow statement, and if you go further down, and you will see a line item in the cash flow statement that shows depreciation amortization right here, the row 129. So that equals to 2838. So once you make that selection, now you can grab the little square box and drag it to the right. So that gives you depreciation and amortization. Once you have depreciation and amortization, now you can compute total indirect operating costs excluding depreciation and amortization. So before I do that, let me just also replace the total with the formula, this guy here, which is the total indirect operating cost. And I'm gonna do this is simply, this is the sum of the indirect cost, which would be selling, general, administrative expenses, restructure and other repair and other expenses. That would be sum of these three, right? And that is total indirect operating cost. You can drag it to the right, and now you can compute total indirect operating cost excluding depreciation. Keep this in mind that the total indirect operating cost in row 64 has also depreciation and amortization. So we want to compute total indirect operating costs excluding depreciation and amortization. So that's going to be equals to your total indirect cost that has everything minus the depreciation and amortization. That's it. So that gives you total indirect operating costs excluding depreciation and amortization, and you can grab the little square box and drag it to the right. Okay, now you can compute EBITDA, which is earning before interest, tax, depreciation and amortization, which would be simply your gross profit, right, minus your total indirect operating costs excluding depreciation. So that gives you EBITDA, right? So now I computed EBITDA, and now you can compute operating income. In order to compute this operating income, so what you have to do is that is equals to your EBITDA, right? Earning before interest, tax, depreciation, amortization minus your depreciation. So that is your operating income, and now you can extend it to the right, and keep this in mind, numbers should not change. Even after you replace these numbers with formulas, numbers should remain the same. Now let's look at the interest expense and income part. Generally, when you download standardized financial statement, you will have this net interest expense, and most often that is negative, which means this is interest expense, and sometimes it could also be positive. So what I want to do is I want to break that net interest expense into interest income and expense, because we need to know the interest income and expenses in future when we want to compute free cash flow. So how can you break that net interest expense into income and expenses? So that standardized financial statement doesn't have this breakdown, but I have also asked you to download as reported financial statement, and you can get this interest income and expenses from your as reported financial statement. So let's see interest income. So you can do equals to and click on as reported and see there interest income on your income statement. On your income statement, you see here on this row 94, right? So you can see here interest income. So I can select this guy, right, and hit enter. So that gives me interest income, which means there is no interest income for year 20. Which year is this? This is 2011, right? And now you can grab this little square box and drag it to the right, and now it gives you the interest income. Now let's look at interest expense. So equals to, go to yours as reported, and you will see here here in row 93 interest expenses. So you can do that. Okay, that is your interest expenses, right? So that equals to this here, and now you can replace this interest income given in your standardized financial statement with net interest income expenses and replace these numbers with the formulas. So I'm going to make it bold and put the line, and now this is going to be for first for this guy minus interest income minus interest expense, but you're going to meet error message here because there's no value. So I'm going to delete this guy here, delete this guy, and now you can drag this formula to the right, and now it replaces your net interest income with the formulas. So that's the adjustment I want you to show when you are adjusting your income statement. Now let's compute total non-operating income. So in this case, I'm going to select this row 73, right? Make it bold and replace these numbers with formula, and that is going to be your total non-operating income, which is interest income or expenses and other non-operating income, equals to your interest expense, right, or net interest income, plus your other income, this guy. So that gives you the total non-operating income. So I can grab this little square box and drag it to the right. Okay, that's it. So now let's go on to earning before tax. How do you compute this earning before tax, right? Which is, again, earning before tax means your operating income plus your total non-operating income. So that gives you earning before tax. So you can drag it to the right again, and keep this in mind. The numbers should remain the same even after you replace these numbers with formula. Okay, we got that right too. So now let's go and see the row 80, which is one of the most important row, which is the net income, right? So you can select this, Control V, and put the line on the top. And now let's replace these numbers with formula. And this is always equals to your earning before tax, right, minus taxation minus minority interest plus a discontinued operation plus extraordinary item plus accounting charges. That's it. But see, this is value because there's no number. I'm going to delete this guy here. Okay, that's your net income. And you can also replace this no number with nothing. And now you can drag it to the right, and I'm going to drag it to the right. Keep this in mind, the numbers should remain the same. If the number changes, that means you're not doing something right. So I changed these net income numbers with formula. Now let's go further down. So preferred dividend and similar is gray here, and net income to common shares. So let's replace that net income to common shares with the formulas. So that is going to be again equals to your net income plus the dividend paid to the preferred stock. So that gives you, now it gives you net income to common shareholders, right? That's it. And now one more line items, common dividend paid out. I want you to include this common dividend paid out in income statement because sometimes we want to compute the dividend payout ratios, and sometimes we use dividend for other calculations as well. So let's extract this. Where is it? If you go further down, and you will see in your cash flow statement the dividend paid out, right? In your cash flow statement you can see your dividend paid out, and if you see here row 122, you see the dividend paid out, and that is dividend paid to the common shareholder. And now you have this dividend paid out, and you can grab this little square box and drag to the right, right? Okay, and that is also a new line item. And finally, I want to compute addition to retained earning. That means I have the net income to common shares, and I have the dividend paid out, and how much is left to retained earning. Then you can simply do this as a net income plus your dividend paid out. So that gives us additional income to retained earning, and I can grab this little square box and drag it to the right, and now that is also a new line item. So let me make this red. Both of these are new line items. So that's I want to do, and further, and there's nothing any adjustment now. Finally, just to make the number of shares outstanding bold and this. So that's all I want. I want you to replace total and subtotal with formulas and add few these line items. And if you want to show the formula, let me show the formula to all the red lines here. Equals to, here's a formula text, right? So you can see what I have done when you are doing for your company. So I think you can drag this all and show the formula, and then you can also go further down. Alright, for the next one you can copy and paste next to it just to show formula, right? And further you can also show here and here, here as well as here. And let me make this a little smaller. You can see how it is being computed, right? So that's too big. So It's slightly smaller. Alright, okay. Now you can see here how this adjustment has been made. Maybe if you want to show with the year, I can also fix this. Go to view and freeze panel, and if you do that, and when you scroll it, it will also show the year, right? Like this. So these are the adjustment I want you to make when you are adjusting for income statement. Thank you.